on this computer, and we're all roll. So, good morning, everyone. My name is Tom Tanner from the Small Business Development Center, and I am joined by Heather Fay, who operates out of her office. She will be taking any kind of questions that you may have by chat. Please put any question. Do not unmute yourself during the presentation since we will be recording it. So I'm not going to take any questions during the presentation. At the end of it, I will be taking any of the questions at that time. Since we do have a fairly small group compared to our first presentation, we may even have a lot more time for more specific questions. So please read over this disclaimer just to make sure you understand that I'm doing this class based on what I know as of today or yesterday. So I'm going to make my best shot at what it is, and until the SBA actually comes out with not the laws, but the interpretation of the laws and how to put the processes together, and then we'll know more about it. So we're based on what we got today. So please keep your mic on mute. Use the chat button we talked about. I will be recording this presentation, and this is basically pretty close to the same presentation I did at 10 o'clock. I may put a little bit more of a twist in this one. We'll have it recorded and probably sent out to you by the end of the day, along with the slides in this presentation. So I want to start off with telling you a little bit about the COVID relief bill, which is what this whole bill is about. And first of all, there's additional funding of $284 for this payroll protection program. So we're throwing more money towards it. There's also an additional program for what we call shuttered venues. And the shuttered venues program is basically places like theaters to museums and to places like that who have been greatly affected by being shut down. There's a special program just for those particular locations. We're not going to be talking about today, so if you are one of those, shoot me an email and I'll provide you additional information. There's also an increase in allowance for a special program just for restaurants, motels, caterers, B&B, things like that, which is pretty cool. There is also a program called employee retention credits that are available. And since you may have not done the PPP initially, but there was a conflict where you couldn't take both of them. Now you can. So this is a great program. It's not for self-employed unless you have employees. So you have to actually have employees and have to have been affected by COVID by being shut down or partially shut down, et cetera. I am doing a class at 2 o'clock on the employee retention credits. If you're interested in that, you may want to sign up for it. All right, so you may or may have not taken advantage of the payroll tax deferment program. Most of you probably don't even know what it even is because it was kind of like a top secret program. Most people didn't do it. But anyway, it's been extended. The same thing for the family sick and family leave has also been extended. Something that might be useful to all businesses is that there's now going to be for the next 2 years 100% write-off for business meals. If you're familiar with the tax rules, is that it's only 50% typically, but they're going to give you 100% write-off for business meals if it was provided by a restaurant and is strictly used to meet with customers. So you're particularly meeting with customer and it's provided by a restaurant, and you can take 100% write-off on it, which is kind of neat. The other thing is if you got an EIDL advance, and I don't know if anybody did, but if you did get an EIDL advance, it's not counted against your PPP forgiveness. You may or may have known that, but initially, if you received advance, they would have taken it away from the amount of forgiveness you got. Now it does not count against it, which is pretty cool. So just a little bit about the program. The initial CARES Act, which was the start of the PPP program, had $349 billion in it. The second installment, which came out a couple of months later, had $310 billion in it. In this particular COVID relief bill, has 284 billion in it for 943 billion. There was still 130 billion that was not used after the second installment, but but if you look at, that's 943 billion dollars that was dedicated to it. And I just threw this out as a guideline that the entire U.S. budget in 2019 was 4.5 trillion, and now they're going to be almost $1 trillion applied just to helping small businesses. So that shows there's a lot of effort to try to help small businesses through this issue. So what's new, but also if you're not familiar with it, it's what it is. All expenses incurred as part of the PPP program will be deductible. In other words, if you get a PPP loan for $10,000, you're able to use that for particular things, which we'll talk about. Let's just say you use it all for payroll and you spend $10,000 on payroll. You can take that $10,000 payroll deduction as part of your federal tax deduction, but you do not have to count the $10,000 that you use to pay as income. So you're getting a deduction plus you're getting the actual money, which is a pretty good deal. If you're an S corporation, there's also an increase of basis for you too. If you're not an S corporation, you probably don't know what basis is, so it doesn't matter to you. All right. If you did receive a first PPP, which a lot of you did not because you're in this particular one, you can receive one as long as that you've distributed all the money before you take the new loan. Okay. So what are the requirements? So one is you had to be in business on February 15th, 2020. Okay. If you were not in business by February 15th, 2020, you're not going to be able to take advantage of this program. You have no more than 300 employees. And the biggest thing that you have to meet is you must have had a 25% or greater loss in revenue during any quarter of 2020 compared to the same quarter in 2019. In addition to that, and we'll talk about that in a minute, you must meet the necessity requirement. And if you're a nonprofit, it can only be a C3, a C19, or a C6. So how is this 25% or greater revenue deduction determined? So what they do is they look at quarters, and it's not a 3-month period, but it's quarters. The way it's written, it's quarters. So typically the first quarter of 2019 is probably not going to apply because this whole program didn't start till the middle of March. So typically you're going to look at second quarter. So if you look at the second quarter of 2019, your gross revenue, and then you look at your second quarter of 2020, where's your revenue reduced by 25% or more? If so, you qualify for this second program. If it didn't, you go to the third quarter. Did the third quarter in 19 versus the third quarter of 2020 apply? If it didn't, then you can go to the fourth quarter. If the fourth quarter did, then that satisfies the requirement. You just have to satisfy the requirement that at least one quarter in 2095 had a reduction of 25% or more. Now, as to the necessity requirement, there is a checkbox on there. It's actually an initial box on the application that says current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. So the SBA just points this out that says, okay, if you don't really have to have this loan, don't take it out. I mean, there's a lot of people, it certainly made the press that they took a loan and they really didn't need it. So you need to look at it and basically check it and says, yeah, this is pretty important to me. Now, it doesn't define what necessary is. It doesn't say critical or anything like that, but it does say necessary. I mean, if you're a small business and you got a couple $100,000 sitting in your bank account, you probably have to question whether or not necessary is a term you can sign off on. The SBA has stated it's not going to question the necessity certification of loans under $2 million. I also want to make it known that anybody who gets a PPP loan, the list of businesses that get PPP loans and the amount that they get is public, and they actually publish these And last time it was actually, I think, published in the newspaper, at least the link to the article or link to the list. So it's just letting you know, if you don't want anybody to know that you got one, you may not want to apply for it. All right, so what's the deadline to apply for this particular program? So the deadline is March 31st. Um, of course, you know, you have to be careful. The funds may run out before then, as they did last time. The funds ran out pretty quick the first time. That's why Congress came back and reauthorized a second run. We have no idea whether or not that would happen, or whether or not there would be a second round, or once that amount is used up, then it's gone and gone forever. Because with a new Congress, they may or may not fund a second round. They may decide to put money in another program instead. We just don't know. So I wouldn't count on it one way or the other. So where do you apply? If you initially applied, you don't have to apply at the same place. But if you hadn't applied before, you would have to look at local banks. At this time, right now, we have no idea what lenders are going to be involved. The SBA will have a link on their website, which we'll send out in the future once they get it active, of what banks are participating or which lenders are participating in the program, so that you can contact them directly. Um, if you're dealing with a bank right now, you can certainly check with them at some time and say, are y'all going to be participating in this program? There are going to be online lenders that have portals that you can go to. I certainly prefer to go with local banks that's going to give you a more personal service and an actual human to talk to. But if you have issues and can't find anybody else, there are going to be companies that are online that will take those applications. So how is the amount of a loan determined? So if you haven't done this before, basically what you're doing is you're taking your payroll amounts from 2019. You can use 2020 or the 12 months prior to the application, but I'm guessing almost everybody's going to use 2019. So, and again, sole proprietorships and partnerships are treated different, so just ignore what we're talking about right this time. But if you're another kind of company, then what you're basically doing is you're going to take your payroll cost, and you're going to take those from your 941, which is your quarterly payroll statements, and determine what your payroll costs are. In a second, we'll talk about what a payroll cost is. Any employee that had total payroll costs more than $100,000, you're going to reduce it to $100,000. And this is $100,000 on an annual basis. In other words, in all of 2019, they had more than $100,000. Okay. Then you're going to reduce that's per employee. If that employee had more than $100,000 in payroll costs, then you would reduce it to 100,000. And then what would happen is you would take your total of all your employees, and we're going to do some examples here in a minute so you can see. You're going to take all the payroll costs of all your employees added up. You're going to divide that total by 12 to give you a monthly total. And then you're going to multiply it by 2.5 times. And that's the formula that you use to determine the amount of payroll PPP funds that you can receive. Now, if you're in NICS code 72, which we'll talk about in a minute, you actually get more. So what's included in your payroll cost? So what you do is you look at your Form 941s, which is your quarterly payroll reporting, and you look at line 5C, column 1. That's your total of your Medicare wages. And then you would add to that your employer and any employee pre-tax contributions. This would be health insurance, FSA, HSAs. I keep forgetting to change that. Disability, dental, or vision insurance, retirement contributions, payment from state unemployment insurance, etc. You add all of that up, and that is your payroll cost. So from that, you also have to do something else. So first of all, what's not included is employees located outside the U.S. are not included, so you have to take that off. Compensation of any employee over $100,000, you have to lower to $100,000 as we talked about it. Now, employers or employees' FICA taxes have to be taken off of that. So you may be adding stuff in, but you also have to take their FICA taxes off, and your FICA taxes as an employer cannot go into this program. You also, if you're involved in any of the payroll credits, qualified sick and family leave wages, which credits was received, or which you plan on applying for, or retention credits, you cannot double dip, so you can't count those particular things. So here's just a look at the 941. If you have payroll, you're probably familiar with this. So all you're doing is looking at this 5C, which I got written around. It says taxable Medicare wages and tips. So that's the column that you're pulling your payroll number from. All right, so NICS code 72. So this includes accommodation and food services like hotels, motels, B&Bs, boarding houses, caterers, mobile food services, restaurants, snack bars, et cetera, et cetera. Anybody who's in that category, you now get instead of using a 2.5 multiplier, you get to use a 3.5 multiplier, which means you get more money, which is a good deal. So if you're in there, if you're in that particular category, you definitely want to apply for this. So how do I apply for this crazy thing? So first of all, you want to find out which lender or what portal or whatever you're going to use. If you're going to a bank, they're most likely going to require you to fill out this SBA application form 2483-SD, which as of a few minutes ago does not exist. It will exist probably, hopefully by the end of the weekend or whatever. We hope so. But that form would be filled out and provided to the bank along with copies of the 4 quarters of 941, or if you have a payroll processor, your payroll processor records for the period that you're using. Again, most of you are probably going to be using 2019. So you would just need to provide the 4 quarters of your 941s in 2019. You would also need to provide your state unemployment reports for the same period. You would need to provide proof that you were paying employees on February 15th, 2020, because that's a major portion of it, that you were still in business and operating and paying people on February 15th, 2020. And you need to provide proof that your business has sustained at least a 25% decrease in revenue for any quarter. This needs to be, if your business is a business that's getting less than $150,000 loan, this is not required at the application process, but it is required at the forgiveness process. So I've been telling people, if you're putting everything together, you might as well just go ahead and do this and turn it in and have it done rather than waiting until you do the forgiveness part of the equation. So this is what the form basically looks like. It is not the actual form, since they haven't come out with the actual form, but it's a pretty simple process. You're basically putting your information, your address, your business legal name, your employee identification number, your contact information, your average monthly payroll, multiplied by whether it's a 2.5 or 3.5. And then it comes up and gives you a total. It asks for the number of employees. The number of employees is going to be your number of full-time employees or full-time equivalent employees. So in other words, based on 40 hours. And purpose of the loan, you're basically going to just click all of these buttons because you're going to use it for whatever you can. If you have owners at 20% more equity, they need to list themselves in here with their information also. And then it's basically just a bunch of check boxes. Again, I don't know what the new form is going to look like. It may be totally different than this one, but I'm guessing it's probably still going to have many of the same characteristics. All right, so let's do a couple of examples of how this program works. So let's say you have no employees that make more than $100,000 a year. So you look at your 941s, you add all the stuff up, you add up all your additional payroll, like your health insurance and everything else, you come to $120,000 in 2019. So now what you do is basically divide that by 12 because you're trying to get your average monthly payroll. In this case here, it'd be $10,000. So now if you take the $10,000 and you use the multiple of 2.5, which is most of what everybody's going to be using, unless you're in the um, restaurant or motel business. So it comes up to give you a number of $25,000. So that basically means your loan amount is $25,000. All right, so let's just take another example. Let's just say that you do have employees making more than 100,000. Well, you have to subtract out what they're making over 100,000. So in this particular instance, it was 300,000. So you dropped it to 1.2 million. You divide it by 12 to get 100,000. Multiply it by 2.5, you get a loan of $250,000. So that kind of shows you the way the process works. So basically, mathematically, this is not that difficult of a figuring process. If you're in that NAICS code 72 or the restaurants and the motels, et cetera, again, it works exactly the same way. The only difference is you multiply by 3.5 rather than 2.5. And that's how simple it is to figure out how to get the money. So we'll talk about the forgiveness here later, but that's how you get the money. So if you're a sole proprietor or independent contractor, self-employed or whatever, it works a little different. Basically, what you would do is use your 2019 tax return and pull up the Schedule C. Your Schedule C is your individual return for your business. You're going to look at line 31, which is your net profit. If line 31 is more than $100,000, then you have to use $100,000 as your figure. If it's less than $100,000, you would use that number and then divide it by 12, because again, you're trying to get the average monthly payroll, or in this case here, your average monthly profit. And then you multiply that by 2.5 times, and that equals your PPP loan. So that's pretty straightforward for a sole proprietor. Net profit divided by 12, multiplied by 2.5, and that's your PPP amount. If you do have employees as a sole proprietor, which some do, you would still use the same formulas for your other employees, but then add into that your amount to get your loan amount. So to submit to the lender, you basically would just have to submit your Schedule C for the period that you use, so the 2019 Schedule C. You're going to have a bank statement that shows you're in business on February 15th. You're going to need to show bank statements to show that you had, or some sort of statement to show that you had a 25% loss during some quarter of 2019 compared to 2020. If you did have employees, you'd also have to provide the same documentation that everybody else is, which is your 941s, your VEC forms, etc. So this is the rule for farmers. I'm not going to really go over it, but I do have it listed in here when we send it out, so you'll have that. If you are a farmer, feel free to contact me and we can kind of go over the particulars about it. All right, so for partnerships, if you're in a partnership arrangement, and this could be just a straight partnership or a limited liability company taxed as a partnership, you're going to use this particular format. One is the partnership itself has to submit the application, not the partners. So the application has to be submitted by the partnership, not the partners. So the biggest thing is the net earnings from self-employment of the general partners is the only thing that you can count. So if you look at your 2019, your tax return, your 1065, which is your partnership tax return, you look at your K1s, K1s for each general partner. You look at line 14, which is the self-employment income. That is the number that you can use for the formula. If you cannot use line 1, I know some cases that partnerships incorrectly put everything for a partnership on line 1. It should be on line 14 if it's self-employment income or wages, et cetera, et cetera. If it's on line 1, you're not going to be able to claim it. So let's just say you do have it on line 14. So if you'd bought any equipment and depreciated it and took a 179 deductions, that would have to be subtracted off. If you look at line 12, that would give you that number. Also, if you had any unreimbursed expenses claim, you would take that number off. So once you get to that net amount per partner, you would now multiply that number by 0.9235, which is basically the number they use to determine self-employment income on the tax return. That gives you your basis for each partner. If that number is greater than 100,000, then you have to use 100,000. If it's less than $100,000, you would use that number. All right, so you add up all your partners, take the total, divide it by 12, and multiply it by 2.5, and that gives you your loan that you're available for that partnership. Of course, if your partnership is a restaurant or motel or something else, that number would be 3.5 times, not 2.5 times. If you have employees in this partnership, in addition to just the general partners, but you also have employees, you're going to go through the same procedure as with the other businesses and just add that to the amount that you're going to determine for the general partners. Again, what do you need to submit? You're going to have to submit the 1065, which is your partnership tax return, along with all the K1s from each general partner. Bank statement shows you're in business on February 15, 2020. If you have employees, you need to provide all that same documentation, and you're going to need to provide something that shows that you have lost 25% or more in a quarter in 2020. If you are an S corporation, only S corporations with payroll qualify for PPP. So if you're an S corporation or you own an S corporation, you're only taking distributions and you're not filing 941s and withholding taxes, et cetera, you're not going to qualify for this program because it's a payroll program. Distributions do not count towards payroll. And if you're an S corporation, you're not taking payroll, but you're taking distributions, you're maybe violating the IRS rules anyway, but it doesn't matter. All right, for owners that are less than 2%, ownership, health insurance expenses can be counted towards payroll expenses. If you're more than 2%, they cannot. All right, so seasonal employer, if you're a seasonal employer, or you think you are, well, they have a procedure to determine whether or not you are a seasonal employer. So the first off is, does the business operate more than 7 months in a calendar year? If you do not, then you certainly qualify as a seasonal employee. If it's more than 7 months, you have to look at the next thing, which is during the preceding calendar year, 2019, or you could take 2020, you had gross receipts for any 6 months of that year that were not more than 33 1/3% of the gross receipts for the other 6 months. So basically just have to do some math to see whether or not you had a lot more business in one 6 months compared to the other 6 months. If you did, then you could be considered a seasonal employer. Because if you are a seasonal employer, then you can select any 12-week period between February 15th, 19 and February 15th of 2020 as your baseline period. And of course, you're going to pick the one that has the most payroll in it. So that's good to know that you're able to pick which one you want. All right, so what can I spend the PPP funds on? So when you get this check from the bank or from whoever, you have to spend at least 60% on payroll expenses if you want them to be forgiven. If you don't want to be forgiven, you can spend on whatever you want. But if you want to be forgiven, which most of you probably do, 60% has to be spent on payroll expenses. Okay, the other 40% can be spent on any of the following categories. So rent, and it says lease signed prior to February 15, 2020. If you do a renewal of a lease and sign a new lease, we're making the assumption that that's not going to be a problem because it's still part of the original lease. Payments of interest on any mortgage or loans that were incurred prior to February 15, 2020. So if you've got vehicle loans, equipment loans, anything else, you can deduct the interest from those particular loans that incurred as long as it was prior to February 15th, 2020, that you incurred the note. In other words, the note was signed prior to that. Utilities, that's going to be water, gas, electrical, telephone, things like that. All right, in addition to that, it kind of have a wide open category here of worker protection products or leasehold improvements for protection of workers. And I'm going to give you the actual wording of those particular products because it's pretty vast. But it's primary things like, you know, you pay to put up sneeze guards, or you decided that you need to have a drive-in window, so you built a drive-in window for your business. That all counts as part of your protection products. Software cloud services that improve your business operation. So this could include things such as Zoom subscription, to QuickBooks, to you know, apps for customers to order online or whatever it may be, or creating a website where you can do e-commerce or anything like that. And then it has this catch-all, which is covered supplier costs, which is basically anything necessary for operation of the business. It's kind of a wide open category, even though I think the design was more towards necessary products, such as your cost of goods, things like that, that are repairs and maintenance and things like that. So here's the actual wording of covered operational expenses. I'm not going to read these things through, but it'll be in the product, the handout that I'll send out to you, especially on this one here, because this is pretty involved as to what's included under covered protection expenditures. And then covered supply cost would be other costs that you could also deduct. This is the one that's kind of a little bit more of a wide open. Again, if you get the funds, 60% has to be spent on payroll. You can spend 100% on payroll, but 60% has to be spent on payroll. The other 40% can be spent on any of these other things that we mentioned. All right, so we'll move to the next section is how long do I have to spend the PPP funds? So you can select either an 8-week or 24-week period beginning on the date the fund distributes. Okay, so it counts the day it distributes. Most of you are just going to pick a 24-week period because you can decide when to finish it at any time. As long as it's been at least 8 weeks, let's just say you select a 24-week period and you used all the money up for legitimate reasons that are payroll and other things after 10 weeks, then you can just stop the period and your covered period is over with and you're done, and then you can submit your forgiveness application. There is a system in regards to talking about reduction in penalties, which we'll talk about here in a second, or actually right now. How much of the loan can be forgiven? So this is not an automatic, you know, you take it out and voila, you get 100% deduction, okay? So what happens is that after the period's over, you have to fill out a forgiveness application to provide the SBA with proof that you spent the money, you spent it for legitimate reasons, et cetera, et cetera. If that all applies and you spend it for legitimate reasons, then you could get up to 100% of the funds forgiven, and you never have to make any payments or anything else. You're done. So there's a couple things that can throw you out of the equation. One is if for any reason you reduce your labor rates by more than 25%. And what I mean by labor rates is that you're paying people $10 an hour and you move them to $7.50. I don't know of a single business that has done that. So typically that's not even apply to anybody. The second one is that the number of employees are not reduced between February 15, 2020 and during the covered period unless a safe harbor is selected. So this is where it gets a little complicated. My last seminar was the individuals who went through this program before. They kind of understood this whole system, which was really kind of crazy. But for you, if you haven't gone through this program before, what they're basically doing is saying, how many employees did you have on February 15th before all this happened? What I don't know is whether or not the SBA is going to change these dates since it's been more than a year or going to be almost a year since then, is whether or not they're going to use a different baseline or if they're still going to use February 15th as the baseline. If they are, they're going to say, okay, you had 10 employees on February 15th, 2020. How many employees do you have now? If you still have 20, if you had 10 employees then, you had 10 employees now, then it's not going to be a problem. You're going to be able to get, you're going to be able to get 100% of it forgiven. If you have less employees now than you did then, it could be a case where you are going to get not 100% of it forgiven because they look at if you kept everybody or laid people off or whatever. This is an area it's still going to have to be shaken out a little bit again because of it, the period of what they're going to use as the baseline for this, because I just do not know. All right. So the case could be made, and I forgot to mention that, is unless a safe harbor is selected. So a safe harbor is basically these rules here. So I'm going to read through these rules. So what would happen is a borrower made a good faith written offer. Make sure it says written offer to rehire an individual who was an employee on February 15, 2020, and the borrower was unable to hire similarly qualified employees for unfilled position on or before December 31st, 2020. Okay. One is this day here is going to change to June 30th, 2021. But the point of it is if you lost an employee and you tried to rehire people and you just couldn't find people to come on board, which was a lot of issues they had, especially because of the generous unemployment benefits that would be offered. A lot of people had difficulties hiring people to work. So if they couldn't find anybody, they could use this as a safe harbor and basically say, okay, I had 10 employees to begin with. I only got 8 now, but I tried my best to hire 2 more, but I couldn't find anybody who wanted to work. So that would not penalize you for that. So the same thing could be positioned for which a borrower made a good faith written offer to restore any reduction in hours at the same salary or wages during the covered period or the alternative covered. The employer rejected the offer. So this would be a case that you made an offer to somebody and they basically say, I don't want to come back to work or whatever. Again, this is a case where a lot of it had to do with the unemployment. The people were making more on unemployment than they were for their work. Therefore, they didn't want to come back to work. So it also is any employee during the covered period, and just don't worry about this alternative payroll covered period. Any employee who was during the covered period was fired for cause, voluntary resign, or voluntary requested and received reduction in hour. You could use that as a safe harbor. So you also have these 2 other safe harbors, which is a borrower in good faith is able to document that it was unable to operate between February 15, 2020 and the end of the covered period, which would be in your case, the period from when you get your loan to the day you finish it, at the same level activities before February 15, 2020, due to compliance and requirements established or guidance issued between March 1st, 2020, and we're going to say that's going to be June 30th, 2021. By et cetera, by whoever. So what it's basically saying is you can't operate your business the same way because the government won't let you operate it the same way because they're limited the number of people that can come in your business or whatever it may be. The last thing would be the borrower is exempt from reduction in loan forgiveness based on reduction in full-time equivalent employees described above if both the following conditions are met. The borrower reduced its FTP and Lloyd's in the period beginning February 15 and ending April 26, which doesn't apply, and the borrower then restored its. So this particular thing is probably going to be rewritten. Again, we're still, this whole section here regards to the safe harbor rules. I'm looking for them to be modified. So I'm just letting you know that part of the forgiveness process is going to be looking at, are you trying to keep your employees hired? If you're not, then you may not get all of it forgiven. So how does the forgiveness process work? Well, one is you must submit your forgiveness application to your lender within 10 months at the end of the covered period. If not, you're going to have to start paying principal and interest. Once you submit it, the bank has 60 days to send it to SBA. The SBA has 90 days to approve it. If you don't do anything, then you're going to have to start making payments on the entire amount until forgiven. And basically, it's a 5-year loan at 1%. So what happens is you have to fill out one of these forms. It's either, if you have loans less than $50,000, it's a pretty simple form. And the SBA is even coming out with a simpler form. At least that's what we understand in the near future, which makes it very easy to forgive the process. If you purchased a business, I'm not going to go into detail, but this will be in a packet that's sent out to you. And the last thing is, if you have employees and you've suffered and paid 941 taxes and things like that, and you had employees in your business sustained a loss either because you were forced to close down or because you had a reduction in hours and things like that, and you sustained a loss in revenue, you can claim what we call employee retention credits. I am doing a class at 2 o'clock today on the employee retention credits. If it's something you're interested in, you may want to sign up, because in some cases, for some businesses, it's a fairly substantial amount of money. But anyway, my point of the slide was, if you're claiming an ERC, and you can do it for 2020, if you didn't get a PPP loan for 2020 and you have employees, you could still go back and get a claim for your 2020 ERC. So you want to be thinking about that. But if you do take out PPP this year, you just got to make sure you're not taking the same funds to pay the same bills with the same credit. So anyway, if you're interested in that class, I would make sure you sign up, because it is at 2 o'clock today. And that is all there is. And I'm sure, let me stop the recording so that